In Money Matters, the local index is set to start to weaken global sentiment this morning before a busy week. All eyes will be on the US Federal Reserve policy announcement on Wednesday, with investors expecting a 75 basis point hike, while US GDP figures are also due on Thursday. Karl Gevers is an independent market analyst. He joins us to dissect these and other business stories this morning. Karl, thank you very much for joining us on this Monday. Let's start with a sense of how we're faring in early trade.
Yes, morning. Thanks, Dudu. As you said, a bit of pressure at the start of the week. I mean, firstly, we had Friday a very weak US close, which happened after our JSE close. So a bit of catch up this morning. Our local market, the JSE, all share down about 0.7%, mainly driven by the resource sector. That's down 1.8% this morning, mainly on the back of weaker precious metals counters like the gold and platinum stocks. And then the rand's holding up fairly well, trading at 16.85 to the dollar. Again, the big news this week would be the Fed decision on Wednesday, and the expectations are for a 75 basis point hike. So that certainly will cause some volatility in markets for the week.
Markets under pressure, and that pressure does not seem to ease as oil has declined at the start of the week. What's driving that move?
Yeah, so oil currently trading below $98 per barrel. The softer oil price is mainly on the back of concerns of an economic slowdown that seems to overshadow the tight crude oil market. And again, the expectation of a Fed hike, and we've seen the similar in ECB, will put pressure on economic growth, and thus the demand for oil should remain under pressure. Again, the potential of a US recession also weighing on the market there. So, I mean, it's quite a pleasant, not surprise, but pleasant situation to see the oil price below 100. Especially given where it has been and the oil price, fuel price that we've seen.
Absolutely. Mr. Price Group's trading update for the 13 weeks ending 2 July is out. How are they faring? And talk us through the latest on the group granting the CEO a bonus.
Yeah, so, I mean, firstly on the first quarter in their financial year, the trading update there, growth in retail sales up 7%. Which one has to look in context, coming off a higher base in the prior period. Also that there were no COVID grants during April and May, and we've had the load shedding in the quarter. So certainly a reasonable result given those pressures. Online sales have picked up and continue to grow ahead of the rest of the group, up 21.4%. However, the majority of the growth in terms of retail sales has come from inflationary pressures. So volume growth only 0.1%. The rest made up by inflation. And I think if one looks at the outlook, again, management's talking about inflationary pressures, the weaker rand, also interest rates impacting the consumer that is more and more under pressure. So certainly outlook not great in terms of the environment, but Mr. Price is reasonably placed within the peers given their price points and also being a majority cash business. And then there was the increase or special bonus to the CEO of 30 million, just based on a benchmarking exercise that they've done. I'm sure the market won't be too happy with that. But again, it just shows, to keep skills, one has to pay up at the moment. There is a shortage of skills, so something that corporates will have to deal with.
Sure, you can't make everyone happy, hey. So Cecil has also posted its production and sales metrics and an update on Natref operations. How did they fare?
Yeah, so their production and sales update for their financial year to June. Production mixed, so for the financial year, fuel, sales exceeding guidance, and on the other hand, you have chemical volumes that were lower, so a bit of a mixed result there. And then on the force majeure that they mentioned in June, on the 15th of June, they declared a force majeure on the supply of petroleum products from their NatRef plant, and that was on the back of supply constraints, shipments that were stuck in ports. Subsequently, they do highlight that crude oil supplies have been partially restored, and NatRef is expected to restore production by the end of this month. So a positive development there.
Thank you very much for talking us through the latest market moves. Karl Gevers is an independent market analyst.